Welcome back after the break to analyze the GST announcement. We have with us Rana, Ashutosh, Kumar Singh, SBI MD. Mr. Singh, first of all, thank you so much for joining at this hour. My first question to you is, now the announcements have been made. Do you expect some kind of demand pickup in several sectors now?
Thank you, Ankurji, for inviting me for this program. Definitely, we expect a huge boost to the demand, and so many benefits. I would say that one is, of course, the demand will take care of many things. This will also help in maybe reduction in inflation. So the more money in the consumer's pocket through this GST reduction, as well as the income tax benefits relief, which is going to come. So overall, huge positive.
Mr. Singh, good afternoon. Mansi this side. Thank you for joining with us. I have two questions for you. With GST reforms open up new banking opportunities in the MSME sector, do you think so? And also with government revenues under pressure due to tax cuts, do you see a need for additional support from public sector banks?
Revenue loss, so overall assessment, what the maybe government also in some statement I have seen that maybe in-house also we have made some study, and the broader sense is this will in the longer term or the medium term, this will not lead to so much loss of revenue to the government, because the whatever reduction will happen in the revenue side because of the cuts, that will be amply compensated by the boost in demand itself. So likely there will not be much impact, minimal impact on the revenue loss to the government. MSME sector, definitely I see it's going to be a boost for them as well, because this sector also is producing, and this GST reduction, they will be helped. This will be help to them also. Maybe demand pickup will help them as well. The big thing, the construction sector, I think that cement prices reduction and all, that will be a boost to the real estate sector, and this is kind of a mother industry. So if real estate picks up, this will definitely help in many ways, the MSME sector.
Right. Mr. Singh, one of the asks which has been there even from finance minister has been the private capex are not picking up. Now with these kind of announcements being made, Reserve Bank of India also already given front loading kind of a cut. Do you think now this cycle may pick up?
Absolutely. Reserve Bank of India, I think Governor also was very clear in his statement in MPC that whatever RBI can do on that side, the rate support side, and the RBI has done. So this is what the additional thing which was required from the government side to support, and definitely it will help in boosting demand, and that is going to help the corporates. So demand goes up, the corporates, we see that there'll be definitely more demand for credit from the corporates as well, the large corporates as well.
Absolutely. Mr. Singh, considering that the GST rate structure has been simplified further and also picking up the auto sector in particular, do you expect loan growth to pick up in the auto and consumer durables, as it is ought to happen that due to lower tax structures, there will be a revival in demand?
Yeah, we expect a boost not only from the auto, demand for auto has to go up. So we see the growth which was not there, it was muted, quite muted, I would say. Demand for auto, so that definitely is likely to go up after the festive season starts. That typically happens otherwise also every year, but with this coming, the demand should be much more this side, and at the same time we will see maybe more demand for credit from the OEMs and the ancillary industries. So both sides we see a lot of uptick for the credit demand, credit growth.
Right. Mr. Singh, I want to understand from you what kind of preparations State Bank of India is making to tap this opportunity which has come in the festive season after the GST realignment. I want to understand from you as well about your loan growth guidance, because you are consistently maintaining that, yes, there will be demand pickup, there will be better credit growth. Can you put some numbers to it as well? Now, your growth guidance has been between 12 to 14%. Do you think now there is a scope for pickup? And I will add one more thing to it. You always take GDP base. Now, even Q1 GDP has come at 7.8%.
So, Ankur, the June quarter number we had published already. So the numbers home loan growth was there, where we expected. This growth was not. The growth was quite satisfactory for us. SME was also growing. The only area, maybe corporate credit, large corporate credit growth was a little subdued. So we see the boost coming up now for the corporate credit demand also, and working capital utilization and all. Second, on the personal consumer side, so more money in the pocket of the consumer through the rate reduction. We see that we hope that there will be demand for auto loans. There will be more demand for even personal loans. So we can expect that there will be growth coming back to this segment as well in the coming quarters. Festive season always, every year we have seen this, and the demand picks up for auto, for even consumer loans, personal loans. So this definitely is going to give maybe a boost to that demand, and we sense that the demand will be back.
That's right. Absolutely, there'll be more income in the hands of consumers, the disposable income. But having said so, Mr. Singh, could these reforms have any impact on the NPS, particularly in consumption-linked sectors? And also, how is SBI aligning its strategy to capture the opportunities arising from all of these macro tailwinds?
On the NPS side, if suppose more surplus is there in the consumer's hands, so their repayment capability also will be going up. So this could be a kind of a support to them to continue to maintain the quality of their accounts. So I would say net should be a positive impact on that side also as well.
Right. Talking about one of the pain points which has been there for banks has been margins this year, and banks have been barely managing to maintain that part. With the effect of a CRR cut also this month and GST cut happening now, do you think it will be a better scenario for banks to maintain the same, especially about State Bank of India? Do you think more than 3% margin is sustainable?
Of course, we are quite sure about that, and like that all of us know that the repricing of the term liabilities, that takes time. So the floating rate, any repo cut, the floating rate loans, the benefit is immediately passed to the borrowers. But the repricing of the liability portfolio, that takes little time. So we are sure that we will maintain this guidance, and repricing of deposit will happen. So that will help us in maintaining our net interest margins.
Absolutely. Mr. Singh, to the viewers who are listening to you through our medium, any message you would want to give at present?
It's a big support coming from the government. So despite all the geopolitical issues we are facing, the country is facing as of now, but this is a big support coming up from the government, and whatever government could have done, I think government has done. This is for the citizens to benefit from this, and so that this country has the resiliency to sustain any kind of geopolitical impact.
Right. Mr. Singh, you mentioned about geopolitical impact, and one of the impact which is considered has been ever since US has announced 50% tariff. Although the discussion continues between both the governments, has there been some assessment on your part? What is the impact of that? And do you think the announcement which has been done by Finance Minister on GST will offset that impact to some extent?
The broader sense, what I understand was that the impact, first is likely this would be resolved going forward, hopefully. If not, the impact, some studies, they are suggesting that the US tariff impact will be something like 50 bips. With these measures coming up by the government, and maybe FM also announced about the support, the packages which is going to come for the industry, which are going to be impacted by the US tariff. So likely with this measure, broadly that will be offset. So net, even if discussion doesn't materialize and settlement is not reached, the impact should be offset by these measures.
All right, Mr. Singh, thank you so much for giving your views on this latest development and joining with us. Thanks a lot, and best wishes for the coming quarters to you.
Thank you so much. Thank you.